Welcome to another episode of the Lightspeed Investing Podcast. We've got Paul H. Graham back again from Nashville. He is the owner of Sandstone Asset Management, where he has a unique company that allows people to invest in the oil and gas industry through alternative investments. Paul, I'm so glad to have you on here because this is a topic that we all know is quite lucrative, as oil and gas is a lucrative industry,
Yep.
but there's not that much information around it in general, right? It kind of feels like you got to be part of the insiders group to really know all the nuances that's happening. So happy to have you here, man, and kind of break down the industry as a whole by itself
hmm
and how the Sandstone Asset Management position yourself in business to be a little bit different, right, than
Yeah,
all of
absolutely.
your fellow peers.
Yeah, I mean, stoked to be back. We had a great time first time, and we're gonna have a great time this time. Oil and
Sure.
gas, although some people are switching to kind of like battery cars or other modes of transportation, like the industry itself is not going away. It's really just morphing and changing. And so ultimately, that's the first thing that I tend to find people or even investors are thinking. It's like, why would I invest in something that's dying? It's like, well, it's actually not. It's just changing, right? As well as oil and gas is actually used to create battery powered vehicles petroleum, like, there's all these different things that like within plastics and our everyday lives that it is ultimately used. Even from a domestic side within the United States, we've then driven more into the economy of it, right? And produced more and been more intentional on it. But why this really matters. So Sandstone Asset Management is myself and two partners who ultimately have a boutique advisory firm and opportunities to connect strategic partners on investment operations or opportunities really, and as well as operations, right? So we do mini private equity, but also give opportunities to investors for them to find their best fit. So why this is different than traditional: if you go on Facebook or maybe Instagram, you might see advertisements for an oil and gas company. Hey, you get to pay no taxes, or you get cash flow, or invest in oil and gas, right? And although they are correct, the one thing is they are promoting their own company. Sandstone specifically underwrites capital raisers and allocates for several companies. So, for example, if you were like, hey, I really want to pay zero taxes this year, I would say, great, I know exactly who to introduce you to, right? Hey, I want to pay no taxes, but I also want cash flow. Okay, great. That's going to be a little bit more of this one, right? So we intentionally underwrite these types of opportunities and then present them to investors depending on what they're looking for to ultimately find the best fit. This also means we work with several oil and gas companies, both on the capital raising side and on the allocation side in the oil and gas upstream space. So, what I'm really saying is this: if you are a corporate employee and you pay a lot of taxes, you're able to invest in oil and gas typically. Now, there's some nuances in terms of the amount that you need. So, typically, it's a minimum of $50,000 to invest in these opportunities. So, it tends to be high income earners. Those are making, $200,000 plus, right? That when you talk to your CPA or maybe your wealth advisor, they would say, hey, alternative investments could give you the opportunity to offset your taxes. Now,
Mm.
most of the time, what I find, and I spend most of my days talking to CPAs. I actually have a group called Octane, which exclusively helps the CPAs learn about alternative investments and oil and gas. Simply, it's just that most don't know about it, therefore, most don't share about it, right? So I'm on a big mission to really educate people, not just on oil and gas, but also just the different types. There's five different types of oil and gas
Oh, wow.
investments that you could make, some of which I believe just aren't really worthwhile.
Mm.
For example, what I call poking a hole in the ground is called wildcatting, right? You're doing exploration. To me, that's not worth what I would want to put my money in, right? Um, and there's a bunch of different types that I could go into, but ultimately the ability to offset your taxes with passive cash flow and being able to offset 70 to 90%, in some cases even 100%
Mhm.
of what you invested, really gives you the opportunity to keep more of your money, actually receive cash flow from what you invested in, and be diversified. And again, because it's passive, you don't have to do anything, right? I have short-term rentals and I have to do things, right? I have real estate, I have to do things. And so ultimately the ability not just to invest in oil and gas, but to learn about oil and gas, the different types, find one that best fits where you're at and where you're going, and then make that placement is really the entire scope, at least of what I do. And then my business partners are the ones that actually do the underwriting and the allocation for different, capital amounts that come in. So that way it's not just great, we now have $10 and we're just going to go drill some wells or improve some wells, right? But it's more importantly how that capital is being allocated is really important too. So really, our experience has been we've helped raise, I mean, at this point between different companies, like even over $100 million as it relates to not just the marketing engine, but also the allocation standpoint. Really, just being that we've been around the block to really help not just educate people, but also ensure that when they invest from the education, they're getting the returns, they're getting the offsetting taxes in the process. So
Sure.
super, super unique and niched. Again, we're not just an oil and gas company. We are an advisory firm that's doing these additional services. We also underwrite deals too. So sometimes people come to us and they're like, "Hey, I met this person who has this oil and gas company. Can you look into this opportunity?" We also do that as well.
That's awesome. So you mentioned, right, there's five different types of investing within
Hmm.
the oil and gas space.
Yeah.
What are the five and what are the top, two or three that you recommend the most?
Yeah, so I mean, I'll just make it simple in terms of like what I would like not do, and then what I like would absolutely do. Right now, I have these different types. I have this whole guide that walks someone through in an ebook of investing in oil and gas. It's on my LinkedIn profile. So if you find me, Paul H. Graham, in Nashville, you'll be able to see on my profile and download it, and it gives you that URL. But the one that I personally would not is wildcatting, right? Again, it's just poking a hole in the ground. You think there's oil, there may not be. The other thing, sure, you can, offset your taxes with the expense of it, depreciation, but you may not get any cash flow, right? Like to me, that's just like a meh, no, I don't want to do that. The ones that I would focus on would be this. It would be a lease of wells, so several wells that are doing typically vertical, just because vertical is the most predictable. Granted, in some cases, depending on certain nuances, horizontal can be as well. But the point is that you have predictable flow of oil
Mhm.
and you're reworking those wells, right? So making them better, right? That helps offset taxes because of the depreciation that you can take. And ideally, they're also potentially drilling additional wells, right? Because one, you have diversification between the wells. If one of the wells goes down, you're still, printing money. The other thing is that you're using those wells to then understand, hey, we should actually drill another one over here as opposed to there, right? So you have a little bit of upside. And then three, like you're just consistent with, that process. So that is my favorite because it's the most consistent, the most likely to offset taxes, as well as, has that potential upside within it, right? And that's different than, for example, again, poking the hole in the ground or like a middle one that again I'm still like a no for is a single well, right? So well bore only. That means it's only one well. Like
Mhm.
it would be like if I went to a multifamily property and there's four different buildings and I'm like, ooh, I'm gonna invest, but I come to find out I only have one of them as opposed to four of them, right? So again, there's some nuances within oil and gas that knowing is more impactful to be able to ensure that the promotion that the operator is really taking isn't overly egregious. Just because, I mean, in the industry, people say a lot of big words and confuse the heck out of you, and then try to make it simple and say, well, if you invest, you make this much return. Okay, well, I mean, obviously these guys seem like they know what they're doing because they said a bunch of big words, right? But that doesn't mean it's always the best opportunity, right? And so that's why with Sandstone, with the things that we've underwritten and written, that then gives the ability for investors to have that not just mindset but also that perspective on this was taken from a different due diligence standpoint because we don't take any oil and gas company, right? We also evaluate the management team, right, and a number of other things because clearly if we're in the team for a while, like no one wants to work with jerks, right? So like why the heck would we work with jerks for a while, right? That makes zero sense. Even if the deal's good, like I don't care, right? No, neither
Yeah,
does
and that's the clarification point is for investors, right, listening in, if this is something that you may consider to do and you want to explore, understanding that when you invest, you're actually investing into oil and gas companies, right?
correct.
And
Yep.
what you're saying within the five ways of drilling,
Hmm.
or extracting the oil.
Yep.
That's just like one of probably your criteria of evaluating if it's a good company to present or not present, right?
Yeah. Because again, it depends on like risk tolerance. Like there's some kind of private equity flips. Like imagine if you bought a house and you renovated it and you're looking to sell it, right, for higher based on its ARV. I mean, that works with real estate. And the same thing does work with an oil and gas, but at least candidly, one of the companies that I know, their fund is worth like it's either 60% or 40% of what they raised, right? So basically they got tax deduction and that's it. Like they're just burning cash, right? And so, models can work, management teams can work, but really there's, a number of different things that we consider to hedge. And that's not just hedging on, the barrel
Mhm.
price. That is an important thing,
Yeah.
but it's mainly more on the operations and the logistics and the overall opportunity.
Yeah.
Obviously, if the price of oil goes up, well, then great. Like your underwriting's already been done and you're ready to go. Same thing with multifamily. Hey, like if everything's been underwritten and is good to go and there's a demand spike and you're able to charge 20% more than you initially predicted, well, great. Like you're still doing good. But really, again, it's a matter of the underwriting piece in those aspects for who we work with, which is just what we at least would recommend as hey, we've done additional you kind of due diligence on it. And then, of course, it's up to the investor. They need to do their own due diligence on it. Just because we
Mhm.
say, hey, this is good, that doesn't mean it's good for you, right? So
Sure.
it's still buyer beware. It's just more of a filter to ensure that you have the right type of opportunity and you're reducing the potential risk of investing in the wrong type of opportunity for you, right? Again, if you need more tax savings, then you should go more left than you necessarily should if you want a little less tax savings, but you want more cash flow, right? Then go right. And again, these are just very different strategies to not just offset taxes, but get cash flow, diversify
Mhm.
your income, and have it be passive. Again, completely different than real estate. Or, I mean, some people buy, the brand new vehicle, right, and depreciate it. But it's just like, again, like if you put that same amount into, for example, oil and gas, like, you know, the returns are going to differ, right? So across the board, you're going to have like 10% to 30%. But on some of these better deals, like you're getting good cash flow, of which even just at 10%, let's say, right? That's, my car isn't paying me any dollars, right? So it's those kind of conversations where if your CPA specifically is not aware of these things, then you yourself need to be educated on it. And that's part of the reason why I started Octane is really just to not just educate CPAs on alternative investments, but give them the ability, resources, and understanding to have the right people to help them. And as you yourself are maybe growing out of your own CPA, you have the opportunity to work with the right CPA that actually understands. So,
So you got Sandstone Asset Management, which basically deals with the high income earners, and
yep.
then you have the Octane that specifically is focused on educating CPAs. Is that correct?
Correct. Yeah. Yep. So that way they both kind of play within each other.
Now
Exactly.
I've got two different categories of question. One is more in like just around purely the investing side.
Okay.
The other is like the career or the industry side. I'm going to start with
Yeah.
investing. So um, there's three segments, right, when it comes to any asset.
Yeah.
There's the barrier to entry,
Hmm.
there's the runway or time frame to actually see an ROI, and then the ROI itself. So you had given me two things. You had said within the Sandstone Asset Management services, right?
Yeah.
You're looking at minimum of 50K. That's the barrier to entry,
Correct.
and the ROI is 10 to 30%. I'm guessing annual, right?
Yeah. Yep.
Yeah, we're talking
Annualized
annual.
returns. Yep.
What's the time frame, right? And what's the distribution look like? Are you distributing on a quarterly basis?
So
Yeah.
these are projects that we work with. So we're not, a fund or we're not the operations or these, projects, right? We're just working with these companies. So it's going to depend on the oil and gas company. So what that means is that some oil and gas companies, when you invested them, the ones at least that we're working with, some of them pay monthly, some of them pay quarterly. And then it's a matter of based on, what you invest in, when you're going to get those returns. It also depends how you classify those returns. Like, for example, do you include the cash flow and what you saved on taxes in the return? Or do you just include the cash flow, right? Like, it's just numbers. It's a matter of how you slice and dice. But timeline wise, again, that's going to be kind of the factor that goes into that. Now, one thing you didn't ask, but certainly is probably on your mind as well, is like, okay, well, how long do these wells go for? Well, I mean, it depends, right? Some of them could be 5, but most of the time they're like 10 plus type years. So that's
Mm,
another thing to learn. Again, really at the end of the day of you looking at what's called the PPM if it's a fund, so the private placement memorandum that will tell you a lot of some of these factors as well as the underwriting. And through that, you'd be able to make that decision if it is for you or not for you. Obviously, seek tax and legal counsel in that process, and through that again, you're just having a completely different experience than you would again if you were buying real estate or you were
yeah.
buying a car, because most high income earners like don't want more on their plate. They just want to do this thing called live life. And so the ability where they can do both is just key. But even business owners too, like I talk to business owners or even high net worth individuals or ultra high net worth, where they just want diversification. And so through that, they want to use oil and gas to help, offset things and create those sort of opportunities.
Well, and I mean, look, I know it sounds like there's a lot of things we can personalize, but just for the audience listening in, if you
Yeah.
just provide like average for the expectations, like the average uh oil and gas companies within your portfolio that you have to
Mhm.
offer, it's going to require 50K, right? Barrier to entry.
Correct. Yep.
The average time frame for you to see an ROI is, right? And then
I
the
mean,
average ROI is actually
those I think are like 3 to 5 years of sorts, right?
okay.
Now the average ROI is going to depend on again if they are kind of doing a again think of like real estate like a sort of model, right? Versus a if you're poking a hole in the ground, like what's your ROI? Well, it could be zero, it could be 1,000, right? So, those sort of like nuances as well. Ultimately, like you are gonna get with cash flow, there is the very good likely chance that you would get your cash flow back in some amount of time, or you would get your return principal based on the cash flow in some amount of time, right? As in comparison to again, if you bought a car, right? Like you're not getting any dollars from the car. Now, maybe rent it out on Turo, but there's all these different factors. So that's just the most part, the average. And like I said, annualized, it's going to depend on the project as well, but it tends to be, those for sure double digits type of numbers. It's also going to fluctuate too, right? So it is a commodity, and you have the ability to reduce operations or increase operations. And that can be because of your desire. It also could be because of the market. And maybe you don't want to pump as much because, oil prices might have gone down, and
Yeah.
that's strategic. And so, all those nuances aside, I mean, again, you're able to typically receive your principal payment back. It just depends on, these different factors of what that's going to be and when that's going to be. But from the tax offsetting side, that is typically without fail 70 to 90%. And it can go up to 100%.
Mhm.
Again, it's just, underwriting the deal
Which
yourself.
is more than the real estate side, right? And so
Correct. Yeah. And
like that.
most important thing,
Yeah.
most important thing is that oil and gas, if invested in the right projects, can offset active income. What does that mean? If I work a W-2 corporate job, that's active income. I want to offset that. Well, the only other ways to really offset that is going to be through, different losses, right? So if I participate, for example, with a short-term rental to use the short-term rental loophole to then offset my active income, well, again, I have to manage a short-term rental. I say that because I have managed short-term rentals for the past 4 years. I left corporate formally like a year and a half ago. I just went back to make money. Um, and so to help grow the next sort of stage of our company. And so that's a big thing where oftentimes real estate only typically tends to offset passive losses or passive income, right? And so really getting an understanding of, are you trying to offset passive or active income? What are the taxes? What is the amount? Is really just going to be the difference maker. And through intangible drilling costs, right? So that is what is known within the oil and gas space for offsetting active income. That is going to be a different tool than necessarily if you, again, were just, offsetting passive
So,
losses.
so it sounds to me like the conviction that's coming through your speech, right, is,
Yeah.
when you compare and contrast oil and gas, private equity versus real estate or cars, it's mainly because of the higher tax deduction percentages
Hmm.
and the fact that you can actually offset an active income, not
Sure.
just, creating passive income, right?
Yeah.
And that's why you like it. But here's the thing, right? How much risk are we talking about? How much exposure are you going to get involved with, for something more robust like this, right? Like,
Sure.
the percentages that where even if you invest, things can go south and then you end up not getting any of your money back at all because at the end of the day, investors do have to take a risk, right? So what do you have to say about that?
Yeah, again, going to depend on the type, and kind of the operator. Really, the bigger thing is that it's not in your personal name, right? So if I own a house and it's not doing well, well, then I still own that house, right? I'm bleeding that cash, so then I need to sell it. The other thing is really just going to be with an oil and gas investment that it is yeah, projected on the cash flow, which is then going to offset the initial investment. In the analysis, right, you're going to see some of those metrics and their assumptions in terms of oil price as well as longevity, and if they've done some seismic type graphs and understanding the pool of oil that's there and the pool, what they expect to as well. Because keep in mind, a bank can go to, or you can take a oil reserve and give it to a bank and have that be an equity collateralized thing, right? So it's not like this is just some, I don't know, like air of sorts that we're picking out of the ground, right? Like this is something that is a commodity that can be collateralized. So again, risk is going to be dependent on the type of project, dependent on the operator, and then the bigger thing is really, again, you just don't own anything. So if the project doesn't go well, well then again, like I talked about, there's been some companies that I know of that have not done well. Well, what happened? They maybe invested 150 grand to offset their taxes. They got to offset their taxes. Maybe they didn't receive cash flow, or maybe it wasn't that good. Well, the downside is you just didn't receive the cash flow versus if you had the car, like you'd have to sell it or pay it back or all these sort of factors, right? So that's an extreme case and is not typical. But again, you want to have these types of analysis done kind of on an initial check before you do it yourself, because you're probably not into the depths of spreadsheets that people would be when they're actually evaluating the deals. But you do want to have a sophisticated investor mindset, and typically, most of these opportunities are for accredited investors, and you can look at the SEC guidelines for 506C for what accreditation stands for on the amount that you need to make. So it's $200,000 as an individual, or $300,000 as a married couple, or it is that you have $1 million plus net worth excluding your primary residence. There is an opportunity to also take a test, or even if you are licensed in some of the securities, you're also able to um, not be or that would basically make you an accredited status. So that's what I think in terms of risk, in terms of the opportunity itself. I mean, the other thing, again, you didn't ask directly, but that could come to someone's mind, is the risk overall with the market, right? As we think about, oh my gosh, will oil go to negative again, because it did briefly in 2020? Like, it's just different swings. Well, typically with energy markets, you're going to see like different swings. So again, it's a diversification strategy, as well as there's different opportunities for firms to really take advantage of operations. And so again, will oil and gas like completely go away? No, it's going to be used, and especially with certain industries being taken, like there's even oil and gas companies that have now been connected to data centers such that we could use these things called AI bots, right? And produce those. So it's not going away from like a risk standpoint. Again, doing your own analysis on the operator and the deal itself is important. Like I said, certainly you could at the very least offset your taxes. You may not get the cash flow, but totally the intention, is that you get the whole enchilada, right? That would be
Well,
the goal and intention. And again, part of the reason why there is that guide that I put on my LinkedIn so that people can really understand the different types, figure out what options, go from there. So,
well, and I was gonna say, I'm guessing, right, if they decide to have a consultation conversation with you and your firm, right, that's where part of your responsibility comes in, right? Is you guys on the back end will have done the vetting and the analysis to present to the investors, hey, here's what I found, here's what I believe to be true, and
mhm.
then it's like make your own decisions, right?
Yeah, yeah. I mean, we, do the initial, analysis of it. Again, like you need to make your own analysis. Like we're not saying that these are vetted in the sense of like you should do something right because that's a suggestive, security essentially. It's more of just our analysis has said, hey, these are good firms that we work with, and we would recommend doing this one or this one. And then you need to do your own analysis. If you want us to do formal analysis for a project, that is something we do, but that is like that is like a paid service, right? So we have the ones that we like to work with because we are working with them. But again, we can't say, hey, here's the analysis that we did. And present that to you because again there's different nuances with that basically in the finance space because imagine that we said yeah this one's good we recommend this one because of our analysis go do it right and then you didn't understand something but you invested and then you didn't like the outcome and you come with a lawyer knocking on my door not happening, right? Simply because like we're not saying you need to do this. We're saying, hey, these are the ones that we work with that we have already vetted. You go, talk to them, right? So again, it is buyer beware, right? You need to do your own analysis, but certainly there's an insight to say the reason why we're working with some of these companies is because of these things. Again, just we can't do the formal third party underwriting on your behalf because that's a just conflict essentially.
And obviously, when you say you work with these companies, right, like you're presenting them on your list to the
Mhm.
potential investors. If you really like something, are you allowed to invest in it yourself as well? Or and have you done that? Like
Yeah.
into a specific oil
Yeah. I
company
mean,
that's actually on the list?
we have, yeah, in a number of different ways, either through, sweat equity type opportunities or
Oh,
actual capital opportunities,
right.
either from, I mean, yeah, just different entity structures or what have you, because we see the opportunity there, right? I mean, for heck, like we almost, there's been a couple opportunities to actually buy oil and gas companies, right? And so we've also gone down that route to bring some kind of mini private equity to execute on that. So
Sure.
totally,
Nice.
those are totally options. Now, granted, that's not something we would give to like the everyday investor, right? Because that would be capitalized within those entities and within that structure.
Yeah.
Again, it's just to say we have the ability to find, analyze,
Mhm.
and capital raise and then allocate.
Yeah.
So we can do everything ourselves,
Nice.
but it just depends on the investor of where they're at. If they're looking for options, like I said, we have options. We can also give some feedback on different opportunities. But again, if there's an ask for the underwriting, you wouldn't go to someone who analyzes multifamily deals and say, "Hey, could you underwrite this deal on my behalf so that I could go invest into it?" Right? Like that's not a good way to go about analysis because ultimately you're hoping that they will tell you something, and if they tell you something wrong, like they're on the hook, right? So legally, they wouldn't want to take on that responsibility to recommend something to you.
Mhm.
Um, for that process. So again, we
Sure.
can dive into the details with investors, but that's a dedicated service
Yeah.
depending on how much they were going to put in and just all these different factors, right? Because
Yeah.
we've talked to some family offices, right, that are like, hey, we want to put 15 million into stuff. How would we go about allocating? Okay, well, based on this and this, your goals are this and that. We would put this much into this one of that,
Sure.
kind of
Yeah.
thing, right? And
I
so
just
that
didn't know, as someone who is in your position, if you're allowed to also invest in the companies that you're presenting, right? That's what I was curious
Oh,
about.
sure. Yeah,
So
yeah.
it sounds like
Yeah.
yes, right? Like
Yeah,
you
I
don't
mean,
have the restrictions there.
oftentimes we have. Again, it just depends. Um, but it's said another way. It's like kind of putting where our confirmation in some of these companies is, instead of just saying, "Hey, yeah, this company's good. Oh, cool. Would you put money into it?" No, like that's a different, story of sorts,
Mm,
right? And so, we do, work with different companies in different, capacities.
sure.
The biggest thing is we just want to make sure that the company itself is allocating properly. Because if there is some sort of investment on our end, certainly we want to do the best, right? But so does the investor. Like I said, investors just need to make sure that they're doing their own due diligence.
Yeah.
So,
So that answers some of my like questions around the investing side of things. Remember, the second set of questions that I have comes from the industry or career.
mhm.
I remember one of my best friends back in the day, a fellow KU alum, he studied petroleum engineering, right?
Cool.
He's obviously like very technical engineer.
Yep.
He does, what we call fracking, I think, like
Okay. Fracking.
offshore.
Yep.
Yeah,
Yep.
like helping out with
Nice.
that around like the Texas, Louisiana
Cool.
area. But the point that I'm making is like, he went to college to get a 4-year degree to be
Yep.
a technician within this industry. Obviously, you're not a technician. You're more, you're the owner, managing partner, so you're overseeing
Correct.
the business side of things.
Yep.
But how does one get in, right, to this kind of universe, right? It's very similar to the hedge fund space. I mean, I'm would have never even gotten access if I didn't shake hands with someone
Sure.
and increase my probability, right, by networking in high caliber rooms. So I'm kind of curious in general, how
Mhm.
would this one get into these things? I don't think colleges offer insights or a pathway for that. And if you would have to say that event meeting Kevin Harrington really
Yeah.
helped facilitate this. So that's kind of what I'm curious about.
Yeah, I mean, so one of my business partners named Michael Tanner, right? So he went to School of Mines in, Colorado, so right, prestigious engineering school, studied petroleum engineering,
Mm.
later went back, got his master's in economics, and he's worked in FP&A finance and even was the director of finance and technology for a larger oil and gas company, and then has done advisory stuff for again all these different companies. So really, this is stemming from his experience as well as other managing partner Stu Turley, and they both run a energy news daily show on YouTube, and even the website The Energy News Beat. Now, his background is in marketing and basically in energy. And so collectively, we have this kind of kumbaya in terms of me and kind of the alt space and the investor experience and education, Mike in terms of oil and gas, finance essentially, and then, Stu on the energy and on the marketing side. And so if someone's wanting to like get into or create kind of what we've created, certainly the industry expert's going to be imperative. The other way is simply going to be through private equity. And
Mm.
so, could you go to school for some of the stuff? I mean, maybe, possibly, sort of, kind of. Again, it's one of those like you want to have an expert, even if you're capital raising for oil and gas, right? You want to have, or sorry, for real estate is what I meant to say. For real estate, you still want to have that expert, right? If you're, doing a new
Yeah, man,
project,
that
always.
real world is a whole lot different than academic world,
Yeah, for
you
sure.
know?
Well, and even just I saw this one guy who, raised $2 million. Now they own this apartment complex and da 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 da. Well, great, but that person also has 20 years experience, within the space and doing it and things like that. Like there's a huge onslaught in 2021 of people who just wanted to raise capital for multifamily and, good on them, but ultimately, I don't know about most, but definitely some got just literally their lunch handed to them. So,
Mm.
it's always important to have just advisors,
Yeah.
not just that are operating partners, but that are also extension of like board members, essentially. And so, getting into it from like a career or like execution sort of standpoint, again, is going to be super nuanced, or it's going to be, collaboration. But like I said,
Right.
from the investor side, you can get into these type of opportunities. It's really just having the right knowledge and team and experts kind of around you instead of just oh, I met someone
Uh,
at a meetup event.
Right.
And don't get me wrong, like that's not, bad, but also even if you're, investing in a multifamily property and you meet someone at a meetup event, like of course you're going to go along with them and they're really, just genuine in all these things, right? Like it's a salesperson. Like salesperson's going to sell, and so oftentimes, you just want to have like third party sort of aspects or underwriting or other things, where it's not just
Yeah.
you're taking the first gal or guy to the dance, but you're really doing the right due diligence across the board.
Did
So
you ever think you would be in this space? Like just when you were, you know what
I
I mean?
mean, so here's a fascinating thing. My granddad was in the oil and gas space.
Hmm.
My grandpa was a missionary. And so, did I grow up thinking I was going to really be either of them? No, but transparently, I'm kind of both of them, right?
Right.
So,
Yeah.
I'm very big on, and we talked about in the other episode, right? The Investor's Guide to Joy, having joy in all seasons, things like that is really
Mhm.
stemming from like a faith perspective, right? And that can be faith in just like yourself. That also be faith in like a higher, greater purpose. For me, that is, that higher, greater purpose, like God, focus, intention, what can I do and how can I serve on this earth,
Yeah.
with just open arms, for others. And on the oil and gas side, he was in this industry for like 20 years and then ended up going out in his own firm, and then having that for like 10 or something, sold it and just traveled the world for 20 years. So I mean that's cool, but like I just didn't anticipate or expect. So there's nothing necessarily that I learned directly from my granddad in terms of oil and gas. Now there's a number of different things I learned from my grandpa, but that was also just kind of life stuff, right? So that there wasn't some hidden advantage on, you know, being kind of in this industry. Maybe it flows through the veins, if you will, kind of like
Well,
blood,
I was
oil
gonna
does.
say,
But
it's just more so. I think it's funny how sometimes the universe will just like place you into certain opportunities because
yeah,
of, what you've done, like all the decisions that you've made up until this point, like your personality, your
sure.
skill set, like I never, first and foremost, I never even knew like specifically what a hedge fund does and the different types of hedge funds out there.
Yeah.
But I always kind of knew that it's like, oh, that's like a wealth creation like industry that is not very well known.
Yeah.
And then like lo and behold, I'm now fully immersed in this space. But I mean, growing up, I was supposed to take on my dad's accounting firm and I said no because I didn't want to do people's taxes and I'm a city boy that loves the suburbs. So
Yeah.
I was thinking, hey, maybe I go be a surgeon because at the time being a
Sure.
surgeon really resonated with me, right?
Yeah.
And then I make the pivot to entrepreneurship, recognizing that surgery was not for me. And then it was just like look like the serendipitous moments that have led me to like now being super immersed in the hedge fund space, even
Yeah.
though I previously didn't have any like experience or interactions with it. So I just didn't know how it was for you. So that's
Yeah, yeah. I mean, it's been unique. I mean, my background, I mean, some of my LinkedIn, I've taken it off because I've had a lot of experiences, but essentially was like, entrepreneur kind of as a kid. My senior year of high school, freshman year of college, I ran an exterior painting business, and I grew that substantially in a year. I then continued in college. I was then commercial real estate software sales. I ended up going into commercial real estate. I had a buddy who then was like, "Hey, I'm building the software company. I think we could get funding. Like, come along." And so I was like, "Okay." We raised, a healthy amount of money. Ended up selling the algorithm to the company, a couple years later, and then just kind of stayed in software. Like I mentioned, expanded my income, invested that in real estate, and then again, just Sandstone really kind of took off with Mike and different opportunities. And so, I've always kind of been advising or helping or connecting or what have you over the years. So there's
yeah.
just been different industries that I've been part of, and I mean, really, what it comes down to is I just love helping people and solving problems. So now there's some industries I don't want to be in and some that I don't necessarily get, but these finance ones with spreadsheets, like 1,000,000%, right? Like it
Sure.
it makes sense. Now I'm not in the spreadsheets, if you will, within oil and gas, but just like kind of the personality and talk and think and what have you. And just by golly, sometimes it's like, hey, we do this, this, and this. Do you know someone who could benefit from this? Like that conversation does not happen in other types of industries, right? Like you and I could potentially find like strategic partners or connections or people and just like that be like good to go, and create some amazing opportunity and meet a crazy interesting people, right? It doesn't always need to be business, but my point is just like in the finance world, like that is possible with the right type of like personality,
Yeah.
if you will. Granted, hopefully it's not overarching where it's like I don't know, just a shark attack. But that sort of aspect of like those types of people who are willing, wanting, and can, really create opportunities and create value for others. I mean, that's just
Mhm.
really cool and fun and easy and exciting. Part of the reason also why I love helping CPAs is because oftentimes they get forgotten about or they don't know. Just I don't know. There's all these like factors where it's just like,
It's funny because people
man.
in finance they rank us having a higher sense of camaraderie. I think it's the nature of work that we do as well,
Hmm.
and that's required. That you kind of have you have to work as a team
Yeah.
and reach out and have multiple conversations with different personalities, right? And that's why I mean I personally love even though we're in different sectors, right?
Yeah, for
I
sure.
love the day to day of what we do, and also it answers my question, right? Because no matter what vehicle of business you're in, at the end of the day, we're all in the people business. So it sounds
Yeah.
to me like, my friend, you got in this space just like the way I got in, which is through the people business,
Yeah,
through connecting with
absolutely.
the right personalities and also knowing, what you have to bring to the table. I think that's also number one key.
Yeah.
Um, it's like having the ability to, articulate what you've worked on
Hmm.
and present yourself as an asset and people go, okay, yeah, like makes sense to have you on the project.
Yeah, for
Right?
sure. The biggest thing, and I don't know if you've taken this before, but one thing that really, really, really helped me and ultimately changed my entire career trajectory was taking Strengths Finder 2.0. Because have you taken it or heard of it?
I've heard of it.
Okay.
Alongside the myriad personality test and
Yeah, sure.
intelligence.
And there's a ton of
Yeah,
them, right? Don't get me
yeah.
wrong, but like why this really helped me was this. I was in software sales at the time and I was struggling and just annoyed of like why I didn't want to make calls every day. Mainly just because like it was not that much of a challenge and I was like I just need something more challenging, right? So I was, right out of college again, just trying to figure it out and all this stuff. And someone gave me the book. I did the test, and come to find out, my top skill is analytical. And then I'm also, a connector, and I'm also someone who sees like the best and possible connection, like between, people, and some of these other things, right? And so the idea of learning your strengths and really pouring into your strengths, you may not know
Yeah.
what position or what industry that might be, but again, leaning into that would make
Oh,
you
it's so huge.
exponentially
Yeah,
more beneficial and value and fun and exciting than
that's right.
necessarily, oh, let me go do this job that I hate that really drags me down, but hey, I make a bunch of money. I mean, sure, there have been seasons where I've just, sure, grinded, but was just really focused and was intentional on it. And then, really reduced expenses, really, increased investments, and kind of gotten out some of those seasons.
Yeah.
But just, it's so much more exciting to just, I'd met with two other people today. They probably could have been half-hour meetings, but we were just hanging out. One turned out to be an hour and 15, the other one turned out to be an hour.
You
Like,
definitely are a bit more social too, right? You have
yeah,
that.
which is fascinating because like
Yeah.
I'm a low extrovert. Like I don't want to talk to 1,000 people a day. Now I go do it because I do like, interacting and talking to people and getting to hear their stories and sharing mine and things like that. But if I was on a podcast or calls every single minute of every single hour the entire day and coordinating and growing and all these like people things, like I did that when I was building software and tech and even my own companies. And I do that a little today, but my employees have a lot of autonomy in terms of like, hey, what are we focused on? Great. All right, let's get that done. You have a
Yeah.
question? Great. Let's like filter that.
Yeah.
But I don't need to hear myself talk. I want to go work on my own stuff. I view my life in a lot of ways of like Legos, where it's just like, I'm going to go play with Legos. Like, sure, we'll meet and like, color projects as a group and things like that. Cool. But like, I also want to like go do my own thing. Now, I don't want to do that in isolation. Like, I do want to come back and present and see and do and try, right? But not just in pure isolation. So that really helped me because I was going down a path of like data analytics and following my father's footsteps. Um, but again, that really just helped me understand my brain and not
That's
necessarily
so
a
funny.
thing
That's
that I
so funny.
wanted.
It's funny for me because like when I got my master's, I
Yeah.
specifically chose the master's under KU Met's biostatistics department, which was
Okay.
applied statistics,
Yeah.
data science, and analytics, since it was the only degree that would allow me to be as close to entrepreneurship as much as
Mm,
possible as a transition. Because in my
sure.
mind, I was really kind of thinking like, it's med school really for me? Like my master's was basically a facade where it was like a self-reflection period for me to I call it like my self-directed MBA, right?
Okay. Cool.
I binge watched Shark Tank, namely to hang out with Mark, right? Mark Cuban.
Yeah. Yeah.
Um, the desire to become an NBA team owner didn't really manifest itself until after college, right?
Sure.
So like really studying, exploring mentorships, but the idea is like I literally chose the data science degree because it was the only thing that was non-clinical that would be a passable bridge to business, right? And
Hmm.
lo and behold, I ended up not even graduating in the last semester because that was the semester that I started my own LLC. They had me take a final semester class on business analytics and the comprehensive exam, and I just couldn't get
Okay.
over like I'm like, why do I need to analyze business as opposed to doing business? Because that's what you do in the
Yeah,
real
sure.
world, is you do business. You don't just crunch numbers and analyze all day, right? You got to
Yeah.
make things happen. So then that was what really like allowed me to go, okay, I'm ready to embrace the real world. And yeah, like 98% completed with my master's degree. So
Yeah, I mean, well, and here you are, and ultimately, like that's just like your path. Like entrepreneurship or business, like doesn't have a set path. I mean, ultimately, it's more kind of a personality and a mindset, right? Like there's no one necessarily saying you have to do this or you have to do that. And the more ability you have to have discernment, to have, unprecedented action, right? Kind of like we talked about the last call, like just taking a bunch of action, as well as like leaning into your strengths, you'd ultimately compound so much more, joy, intentionality, all these things than you would otherwise.
yeah,
There's a quote I'm going to summarize that was really impactful that was from, was it Richard Knocker? I think from Knock Industries. Essentially, it says, the Pareto principle is, the rule of 80/20, right?
yep.
But ultimately, if we were able to focus on the 20, we were able to double down on the 20%, we would achieve everything that we've wanted to in 2 days, in working 2 days, and we would achieve 60% more. And so the ability of not just more equals more, it's actually less equals more, and the right less equals exponentially more.
Oh, I
I mean,
know.
that's really truly what entrepreneurship is saying no, staying focused, and learning and being curious along the way. It's not necessarily grinding it all out. Now, granted, certainly there's different situations and things you got to do with the branding or the logo or maybe the website or all these other factors, but really truly like you mentioned, it's really just people, and it's just finding more
Yeah,
people
I
to
was
see
gonna
if they
say
want
it's a
what you
leverage
want.
of the
And
right people. Like you're
yeah,
leveraging three people, right? You,
yeah,
Mike, and Stu. And it's
correct.
funny because like I have two, like there's three members on the executive team over here as well, and
Yeah,
like
cool.
we work in great tandem because we all have strengths that we can contribute to the table, right? Where
Yeah,
the
for
other person
sure.
may not have that strength, right?
Yeah,
So Paul, it's amazing, always a pleasure having you on. Learned
thanks.
a lot today.
Yeah,
Thanks so much for unveiling, the details and the curtain, right, on the oil and gas industry.
absolutely.
For those wanting to learn more about your oil and gas investment opportunities, right?
Yep.
What's the best way to get a hold of you and get that information? Or, right, and that because that's for corporate owners, or if they're CPA and they want to get trained on this with your Octane group, right?
Yeah.
What's the best way to get access?
Yeah, I would think the best way is probably honestly through LinkedIn. I mean, obviously you'll be able to see, the website, and then also learn about Sandstone and download. There's an ebook right now I have for both CPAs and for
Nice.
investors, and those are all on my LinkedIn. So Paul H. Graham is really just going to be the best. Shoot me a connection request and just say, hey, found you from the show, because and say, hey, Lightspeed Investing, because otherwise, like if you don't tell me where you're from or anything, I think you're just a random contact. But anything you're looking for, or information or education that I could provide, happy to. And the reason being is this: not only sure am I in the industry and have this company and also work with CPAs, but ultimately I've seen people spend 3 to 5 years to save $100,000 and lose it in 3 to 5 months. And so that level of pain and lack of just opportunity and access, right? I want to be someone of access. So regardless of where your income level's at, either on the annual basis or on net worth, the ability for you to make the best decision is going to be based on information. So ultimately, you need information to make the best decision. And an oil and gas company traditionally is not going to give you this level of
No,
depth
no,
or
it's not.
insight or anything. And I say that because we have some clients that are like, why, like you're educating people? Like, what do you, no, what do you mean? And they just go into so much oil and gas, like just word vomit, that it's like no one knows what you're saying.
Yeah.
Like talk about it like a 3 year old, and it's like, okay, the
Yep.
banana and the apple, kind of thing. So that's just something I'm really passionate about, for people to really see, hey, is this worthwhile to invest? Because there's nothing bad than doing the wrong investment, but also the wrong investment for you. So that's
Right.
why I've created some of these resources and talk about it just to help support along the way.
Right. And you got to ask yourself, as always, what's the worst that can happen, right?
Yeah,
And on that note, Paul, again, thanks so much for having you.
you bet.
It was a great time, and I hope to see you sometime in the near future. Okay?
Sounds great. I appreciate it. Thanks again.
All right, man. Thanks. Appreciate you. Take care.